Three things rich people will not tell you, because I had to dig and dig and dig. They're not going to tell you how to live corporate life and how critical it is. When you live as a corporate entity, see, here's the easiest thing to think about. Companies make money, individuals get taxed. So if you're just an employee out there and you don't have a company, there's every reason. 81,000 pages of deductions. That's number one. They're not going to tell you that. They're not going to tell you, number two, how to powerfully use a Roth IRA, which is a tax-free, tax-deferred account. They're not going to tell you. And they're probably not going to tell you their inside real estate strategies. I became a real estate millionaire in 1999. I have never been out of real estate since. I was in real estate a little before, but the wealthy, 99% of us invest in real estate, land to RV parks, storage units. We have a whole multitude of a variety of strategies, and it's pretty tough to get somebody to truly open up and tell you what they're doing. If you want a fourth quick one, they don't tell you how to use insurance properly. I got a lot to tell you. Keep asking me questions.
Well, guess what? I'm going to show you exactly how to use life insurance properly. You see, wealthy people do not leave money in the bank. Why? Because they're earning less than 0.04%. They take that money and they put it into a life insurance contract. The reason is because you can earn anywhere from 6 to 8% on the money that you put into the contract. Now, keep in mind, there is cost to the life insurance itself. Now, what you can do is once you put in the lump sum, you can access 80 to 90% of what you dump into the policy. So let's say, for example, you put in $50,000 and you need a $40,000 for real estate project. You can take out a loan against that $50,000, meaning your 50 stays in the policy earning interest while the insurance company loans you $40,000. So you take the 40, you put it into your real estate project where you now have rental income of like $2,500. Then you can now use part of that to pay back the loan to the insurance company. So here's how it works. Let's say it took you 10 years to pay off the $40,000 to the insurance company at the rate of 5%, and your monthly payment is $425, which is coming from your rental income. Guess what? In 10 years, you would have paid back a little over $50,000 to the insurance company. I know what you're thinking. Deep, it doesn't make sense. Well, that's where you got to understand the difference between amortization and compound interest. Remember, your $50,000 never left the account. It was still growing and earning interest at the same time. So that $40,000 that you put in, still for the same 10-year duration, assuming that you're only earning 6%, not even 8% on that money, guess what? In 10 years, your $40,000 is now $71,000. How much did you pay back to the insurance company? $50,000. How much did you get back? A little over $70,000. This is how rich people use life insurance contracts. But here's the reality. You don't have to be rich. You don't need a lump sum. You can start with any amount that you have and let that money grow and do the exact same thing. So if you want to learn how to get something like this set up, comment the word wealth below and I got you.